Well, thank you so much for tuning in to NDTV Profit, and it's great to be getting in for India market close right here on NDTV Profit with me, Niraj Shah and Tamanna Inamdar. And it promises to be an exciting day of trade, exciting last 1 hour of trade, simply because we've had a good run today. You have to admit, Tamanna, good afternoon. It's been a very strong run. And yes, I want to focus on the large cap, but the story clearly is across the street because it's not just the IT bigwigs, but the broader end of the spectrum, which has done well too. Good afternoon.
Good afternoon. Good afternoon to everyone. Great to have all of our guests also joining the show, and Neeraj and I bringing you the special broadcast on what is going to be definitely a historic day for the Indian markets. 21,200 has been crossed on the Nifty, 70,500 on the Sensex. What a run, a dream run that we're seeing. So, what do you do in a market like this is the question. What do you really go ahead with? What's the play? All of that is something we're going to talk about today with Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities. Hi, Sunny. Ruchit Jain is with us. He's a CMT lead research analyst at 5 Paisa. Hi, Ruchit. Great to have both of you on the show today, and hope you're all doing well and having a great day today. Ruchit, let me start with you just on what the charts are looking like. Where really is the cap to something like this? I mean, we end up asking this question pretty much every day, and the upper end is just going higher.
Yes, hi, very good afternoon, Tamanna. Very good afternoon, Neeraj. Well, I think when you are in a bull market, it's better not to try to attempt that what could be the immediate top for the market, because what we are seeing that this up move has not only been led by the broader markets rally, but still there are enough large cap space, the pockets where the rally has not yet started. You look at some of the large cap names such as Reliance Industry, HDFC Bank, Infosys, TCS, just to name a few, which have in a good weightage in the index, but still they have not seen that kind of a move which we have witnessed in last 6 7 months in the markets. So I think better not to guess what could be the top for the market. The trend still remains positive, and in fact, if I just look at the data also, FIs who were net sellers in the cash segment or in the index futures in last 3.5 months have now turned net buyers in last 15 days. They have been buying not only in the cash segment but in the index futures also. They started this December series with a long short ratio of 76%. Sorry, 36%, where only 36% of the positions were on the long side. Now, gradually, they have increased those long positions, and now they are around 57% long positions. So, whenever there is a combination of cash market buying along with the fresh long formations of the index futures, in that phases, usually we see a good trended up move, and that's what we are looking in the market right now. Now Nifty is at all-time high. So usually whenever no all-time highs are there, technically we take out retracements of the previous correction to make a guess that where could the next resistances would be. And those such resistances are indicating a possible targets around 21,370, 21,400. So I think this move is yet it's still to continue on the higher side. IT has started participating today. PSU banks are yet to see in good up move from current levels also. Metals, no certain metal stocks are looking quite positive from current levels. So I think on the high side, we are expecting levels around 21,370 to 20,000, 21,400 in the short term.
And on the lower end?
So now 20,800 no, would become a good support. No, yesterday's low, which was around 20,800, I think that is the no higher low which has been formed on the lower time frame chart. So until this low is broken, I think it's better no to stay with the trend.
All right. Just a quick word there from Sunny, and before that, a recap of what has been happening today. Obviously, huge news today, Niraj, from the Fed in the morning, and we spoke about that impact, massive gap up. But the interesting thing is that it has retained, it has sustained, and the heroes of the day have been, like zero ban gaya hero, that kind of scene for tech companies that we've seen all day. Just look at the kind of run, not only in like an LTI, Mindtree, Coforge, Persistent, of course, but a Wipro, Infosys, TCS, everyone has joined the party, isn't it?
Yeah, and that's the beauty for today's trade, that IT has come back and stayed relevant. But at the same time, it's not a market which is only punctuated by defensives or non-performers coming to the fore. Just a scan at the broader end of the spectrum shows you that IRFC, which has been active, up 11%. There is strength in SAIL, up 7.5%. Ircon is up 7.5%. So a clutch of PSU names as well participating. It's not just a sort of a defensive bet in the market. So that is the beauty, I think, of today's trade. And banks are relatively quiet. So, I'm itching to understand what is it that Ruchit wants to say in terms of specific stocks. But before that, get an opening thought, Tamanna, from Sunny as well, as you said. Sunny, what do you tell clients who come and ask, कि भाई पहले पैसा नहीं डाला था, we are getting the left out feeling, but we are 21,200. Should we put in more money right now, or should we kind of space out the investments?
Yeah, good afternoon, Niraj. Good afternoon, Tamanna. Definitely, I mean, right now there is a FOMO feeling among the investor, and we are getting a lot of requests to deploy the fund at a current juncture. Obviously, it's a very hard task at current levels to find a value pick. Obviously, valuations has come up significantly, and right, going forward, what I feel is that bottoms up stories is something which we need to look. Companies which are likely to compound their earning north of 20%. Those are the companies, despite of they are in any market cap bucket, whether it's a small cap company or large cap company, but ultimately earning growth has to support the valuation. And that is something what we are advising to our clients. So companies where there is a decent earning growth, or at the same time, for that matter, there is a valuation comfort. So only sector which I find right now, which is comfortable valuation is the paper sector. But again, that's a cyclical sector. Entire paper sector is trading at 5 to 6 price to earning multiple, but there is no trigger as such for the earning growth. So I think if somebody want to deploy a fresh capital at a current juncture, somebody need to at least take a view of 6 to 12 months. Over the period of next 6 to 12 months, we may see, assuming that the current government will continue post 2024 general election, 8 to 10% upside on Nifty and Sensex. And on a stock specific idea, probably one can generate north of 15% return also.
Okay, so watch out for that. Tamanna, what started off this rally is something that you track very closely, which is politics, and we will kind of involve that in that conversation too. But just an opening thought from Ruchit on the ideas, Tamanna. It's 240, Ruchit. What are the stocks that you would be trading today, not necessarily just for the last 50 odd minutes of trade, but initiating a fresh trade on?
Yeah, so Niraj, I have a couple of recommendations which one can look for buying at current levels. Of course, from a very short-term perspective of 4 to 5 days. First is a buy. First would be the mid-cap stock Godrej Industries. Well, if I look at the positional charts, then in the last 2 or 3 months, we have seen that the price up moves have been supported by good volumes, and the down moves or the corrections have not seen any kind of higher volume activity. Now, since last few days, we have seen some consolidation around its 20 days exponential moving average support, which is and the RSI oscillator has given a positive crossover today. So we are anticipating a resumption of the uptrend from current levels. So the risk reward ratio is favorable to create fresh longs over here. The stock is now trading around 670. So one can buy with stop loss below 655 for potential targets around 720. And M&M Finance is the second stock where I would recommend going long today. So primarily, if you look at the derivatives data, there has been about 6% OI decline in M&M Finance. One of the relative underperformers, it has been within the NBFC space. And the main reason was the short formations which are happening in the stock. And today, a cut in the open interest along with the rise in price indicates that those shorts are coming to cover. So a short covering move, and since the stock has given a breakout above its 100 EMA, I think fresh long formations could also be there because of this underperformance, which could see a catch-up rally over here. So M&M Finance, one can go long with stock below 277 for potential short-term target somewhere around 300.
Interesting.
Sunny,
so M&M Finance is one more stock as well. Sorry, Tamanna, continue.
The only thing I wanted to ask, Sunny, is because you talked about M&M Finance, and in the finance space, so many interesting ideas popping. I just thought I'll ask him about IREDA, REC, PFC, stocks like that.
You're stuck with that stock, Tamanna.
No,
You're stuck with
I
IREDA,
can't.
right? For the last
Look at what it's doing. Just look at what it's doing. It's befuddling. I'm looking for new terms to describe what's happening. बस इनका हो गया, or there's more to come, Sunny?
What I feel, Tamanna, is right now the rally in entire power finance company, whether it is REC, PFC, IREDA, is purely fund flow driven rally. So at 32 rupees IPO issue price, it was trading at one price to book, looking very cheap, lot of value for the investor on table. At 120 rupees, right now trading at 4 price to book, way above the HDFC bank price valuation multiple. PFC, REC, in fact, are looking relatively cheap as compared to IREDA now. But having said that, if somebody is taking a slightly longer horizon view, we all know that all these three companies are the nodal agencies to fund the renewable energy project. And recently, REC senior management went on to say on record that their loan book has increased from 50,000 crore to nearly 1.5 lakh crore, and they are expecting this book to grow to 3 to 4x time by 2030. So maybe Street is discounting 26, 27, FY26, FY27 right now. And there is a lot of optimism and excitement to add this portfolio, add these stocks in the portfolio. But having said that, at current juncture, whether I am a fresh buyer in IREDA, I would like to wait for a pullback, maybe at 2.5 time price to book or 2 time price to book. I don't know whether that will come or not, because purely this rally is a fund flow driven rally, and not just I can't justify on valuation parameter, but when there is a liquidity rush, you never know what can be the peak valuation.
Yeah, but so actually, and if I can squeeze in one question here, Tamanna, and Tamanna is right, befuddling could be a term for anybody who thought of IREDA IPO. But Sunny, and I don't know if I missed that part, maybe if you answered it, but PFC, REC are the other two, right? I mean, they are not as expensive as IREDA. They used to be dividend yield stocks. Suddenly, people are viewing them as growth stocks. Is there merit in thinking of them as growth stocks? I want to understand the fundamentals. And I also want Ruchit to tell us if there is merit in trying to trade them, because these are leverage plays possible, both PFC and REC. So Sunny, to you first, fundamentally, IREDA is one story, and thank you for that. What about PFC, REC?
Again, what I feel, PFC REC is again a proxy play on renewable growth story of India. So we all know that recently government has appointed REC as a nodal agency to fund the renewable energy projects, and that is leading to a lot of excitement. At the same time, a few years back there was a problem on asset quality as far as these companies are concerned, and right now we are hearing about write back also from companies like PFC and REC. So in terms of loan growth, maybe that time is good as far as PFC and REC is concerned. But in terms of valuation, again, company trading at NBFC trading at 4 times, 3 times price to book, as compared to the relatively cheaper companies available like HDFC Bank, Axis, ICICI Bank. I think one can't justify on valuation parameters.
That question to Ruchit on the charts, and the reason also that I'm asking about PFC REC is because you will remember, Niraj, we talked about it on the editor's cut at the start of the week. We talked about PFC REC, we laid it all down, and what we said has come through. So a bit of bragging rights there as well. But Ruchit, just on the charts, are you making any sense of it? Because Sunny is very clear that now it's fund flows. There is no justification in terms of valuations. What about on the charts? About the three stocks we've talked about.
So Tamanna, if I look at the PFC and REC, you ask any technical analyst about the trend, I don't think that there would be anyone who would say that the trend is not positive. So the broader trend for these stocks continue to be positive, but yes, the momentum readings now after this recent rally are quite overbought. Generally, when the trend is very strong, the momentum, the move could continue in the overbought zone as well. But when it comes to risk reward ratio for fresh entry point, I think the stop losses are quite deep from current levels. Even if I consider the minimum 20 EMA support, which technically is considered as short-term support levels. So I would advise to deploy fresh funds in PFC RECS at current levels. Maybe if we get any corrections, then buy on dips could be a good strategy to enter into such stocks rather than chasing at higher levels. But yes, if any existing positions are there, those investors who have bought at lower levels, I think there's nothing to worry for them even at current levels, as the trend could continue to go higher slowly and gradually. So I would advise to continue to hold on to existing long positions if any, but fresh buying won't be recommended because of overbought setups. In case if we get any kind of dips in the near future, then buy on declines, no strategy should be kept over here.
Okay. Gentlemen, stay on. Have to take a view from both of you on yet another topic which is of interest, and that's insurance. And I'll get my colleague Vishwanath Nair, he's a banking editor, into this conversation as well, because insurance companies have had some announcements which might be plaguing the sector currently, but there is, well, maybe a proper development yet to happen. Vishy, there is a lot of news flow around that. Can you tell us what the development is? And what is there are still some unanswered questions, I believe, which need to come to the fore. So just fill us in on the details.
Right, Niraj. So, as you said, there has been an announcement, and this came in yesterday in the evening, where IRDAI, the insurance regulator, released an exposure draft, which calls for certain changes in the way insurance products are designed at this point in time, specifically with regard to surrender charges. Now, that's where the key discussion point here is that if a customer were to surrender their policy before the term of the policy has ended, then what do they get in return? So what analysts are telling me is that so far there has been a sort of a free for all in the system, that every company sort of decided for itself as to what they would pay their insurance customers and when they're paid, if in case of discontinuation of the policy. Now the IRDA has come out with this exposure draft, which specifies a standard format that will be applicable across all insurance, life insurance products specifically, and it would apply to every single insurance company. Now, initially, when this came out early in the morning, the discussion was this is going to be negative because insurance company will be shelling out more in terms of surrender value, and the charges they apply to the customers will come down, and therefore it will hurt the companies. But what I'm gathering from people is that there's actually no clarity at this point in time as to whether this is a good or a bad thing for an insurance company at this stage, at least, because this is still an exposure draft. So this has to get the public commentary in, then the regulator will decide what the final norms will look like. And only after that will we know whether the charges are going to be higher than what they are currently, or whether lower than currently, and therefore any impact on the insurance companies themselves.
Okay. Thanks, Vishy. Thanks for that update as well. And this is interesting from multiple perspectives, Sunny, because I want to get a fundamental view first here. Life insurance, for all the talk of under penetration and great franchises, and they are great franchises, yes, but for all the talk of under penetration and how earnings will compound at a great rate, we're looking at it since 2017 when these stocks have listed. The cumulative return, not CAGR, cumulative return is probably 120 odd percent over 6 or 7 years. These stocks haven't really created that kind of wealth, right? They've given maybe slightly better than FD returns. And there is a new development every single time which comes and thwarts the story per se. Do you invest in this, or are there better avenues elsewhere?
So yeah, definitely what we are seeing that of late the regulator has been cleaning the sector of insurance, wherein there is a lot of changes in regulation which is happening. Maybe in short term this will continue to remain overhang, and once this cleaning is done, then maybe the large players like HDFC Life on the life insurance side, they may continue to grow, because time and again the ultimate the story in insurance sector is that moving toward an margin accretive product. A case in point, a term plan or protection product, which is the more margin accretive product for an insurance company. But having said that, the recent development which has happened, what I feel that can have some impact on embedded value, which is again computed by some third party auditors and all those stuff. So to that extent, we may see some again valuation derating to that extent. But in long term, again, it's an underpenetrated sector, and post COVID, I think every one of us has realized that insurance is one of the basic necessity. And so that part will keep on growing. Maybe in short term, underperformance will continue. But if somebody has got a view of more than 3 years, then this is the right time to accumulate quality businesses for a long term portfolio.
What are these quality businesses in your view, Sunny? Like after today's news, you saw HDFC Life, ICICI Lombard get hit the most. Some of the public sector insurers have recovered to some extent. Your GIC, LIC are doing fairly okay. So what looks promising over here? And will you also look at the ones who are focusing on the pension part of it? I asked because we were speaking with Vibha Padalkar of HDFC Life just yesterday, in fact, and she was saying that the focus is now on pension plans because Indians are going to live longer and they're going to outlive their retirement age by a fair bit. And that's where it comes in. So, do you have a qualitative?
So again, I would like to divide my recommendations into two buckets. One is the life insurance segment and one is the non-life segment. So on non-life front, obviously ICICI Lombard is the market leader as far as profitability is concerned. But again, trading at an expensive valuation. But that is something which I would like to add in my long-term portfolio. Uh, Public sector companies like New India trading at a very cheaper valuation. But if you see the combined ratios, still all these companies are into losses. GICRE again, which is into the reinsurance space. Time and again, we are seeing a lot of natural calamity occurring across the world, and that is leading to a one-time hit in the GICRE also. RE also. But again, valuation is comfortable there. So we need to see whether the company will be able to make operational profit. So again, on the general insurance side, my top pick will be ICICI Lombard and Star Health. Of late, Star Health has also started reporting a fantastic set of number. On life insurance side, again, my pick will be HDFC Life, obviously one of the market leader of profitable, right strategy in place to grow the profit, shifting their portfolio mix towards the pension or protection side, which will drive the high margin for the company. And in addition to that, again, LIC. So after a long time, we are seeing some positive commentary of shift in product portfolio for LIC, trading at 1 times price to embedded value as compared to 2.5 to 3.5 times for a private player. So LIC can be value buy in a life insurance sector.
Ruchit, you like any of these?
It just reminds me of that budget 2023 where we also witnessed significant changes. When announcement was that for removal of tax-free advantage from saving insurance plans where premium exceeded rupees 5 lakh. So at that time also we witnessed some sharp correction in the insurance stocks. But what we saw that the down move was quite limited, and from low levels again the stocks have witnessed good buying interest. So this clearly indicates the over mid to long term. I think in case if we get any such negative reaction to such news from the insurance space, the buyers could be there at lower levels and hence the downside should be limited. But I think the PSU insurance stocks such as SBI Life Insurance or LIC, the kind of price volume action which we have seen in last 2 or 3 months, the up moves have been supported by very high volumes compared to what we have seen in the recent past. So I think these are the stocks which would witness buying interest in case if we get any kind of decline. So I would advise to keep a buy and dip strategy in case if there is any kind of dip in the short term because of these news flows. Use that as a buying opportunity in stocks such as LIC or SBI Life.
Okay. Okay. Well, so that's one pocket of growth. I was looking at what else, and it certainly seems to be, as we said, a PSU day, but also an IT day. Those are the two pockets that have now virtually stood out. Sunny, I don't know if we got a chance to talk about IT, but mid-cap IT in particular, that's coming off, at least the IT services companies are coming off from fairly significant lows in the recent past. Is there, maybe the valuations are okay there. Is there something that you like, or is it too early to call an IT investment cycle currently?
So Niraj, again, I would like to divide this discussion into two parts. One is large cap IT pack and one is the mid cap IT pack. So for large cap IT pack, it is the writing is clear on the wall that December quarter and March quarter are likely to be the weaker quarter. That is that was a clear commentary during the quarter two con call. But having said that, the way US Fed has given a dovish commentary, and at the same time, calendar year 24 IT budgets will get finalized. So the main concern for all the large cap IT companies was on the demand front, right? So in case the situation is easing on business front in US and Europe, then we may see that clients of Infi or TCS may go for discretionary increase in discretionary spend in the coming quarter, and maybe street is discounting that in the calendar year 24 we may see some increased budget for all these players. and at the same time valuations are comfortable as far as large cap IT companies are concerned. But having said that, the growth in FY24 full year will be a kind of single digit for large cap IT companies. On the low base of FY24, maybe FY25 we may see kind of 8 to low double digit kind of earning growth for large cap IT companies. So there, if somebody want to deploy money in large cap IT company, SIP is the way, gradual deployment is the way over the period of next maybe 3 to 4 months. Coming to mid cap side, small cap side, again, these companies are outperforming their large cap peers in terms of growth. And to that extent, we have seen rally also. Valuations are north of maybe 40, 50x price to earning multiple. So in that also a company like KPIT, which is again a play on automobile spend, capex on automobile side, right? So there we may not see any dip or correction as far as capex from the client end is concerned, because there is a technology shift which is happening over there, and hence it is assuming that that company will continue to grow at 25%, 20% plus CAGR for next 3 to 4 years and can sustain a premium valuation. Similarly, ER&D companies like LTTS or for that matter Coforge, there also we are seeing a heavy spend from the end user client. And there also the street is pretty confident that at least for next 2-3 years, the earning growth will sustain in a high double digit number. So, and buy on deep as a strategy, and on large cap side, maybe gradual accumulation or SIP route recommended.
Okay. Now, before we come to Sunny's ideas as well, for viewers who are joining and thinking why the markets are doing what they are doing, a key reason is the Fed decision that came out overnight. And we spoke to a bunch of guys in the morning. Tamanna did a roundup of what the Fed details were. Tamanna, there would be a few people who would be wondering what's quite happened. What stood out when it comes to the Fed commentary, and any takeaways from the people that we spoke to as well this morning?
Niraj, what I'm watching is that my line in the morning, when we did the India market open, it has become a headline everywhere. When I call Jerome Powell the Santa Claus for the market. So everyone's talking about Powell's Santa, kicking off the Santa rally, and truly he has. So quick backdrop over here. For the last 6 weeks or so, you've seen US markets running up in the anticipation that there will be a pause by the Fed, and now a clear roadmap to rate cuts. And that's exactly what the Fed delivered on all fronts. So yes, there is a pause, third pause in a row. The Fed has not explicitly said that we will start cutting rates from XYZ time. In fact, Jerome Powell, in a classical Jerome Powell manner, has hedged his bets in that sense. And he has said that if the data shows that things are looking difficult, we might start raising rates. But the dot plot, which puts together a group view of Fed officials, hints 3 rate cuts next week, totaling up to possibly 75 basis points or 25 basis points each. The question is from when? Now, the big point over here, Niraj, is fund flows, foreign fund flows, and where are they going to come? And I just want to go back to Sunny on what he said, because we were asking him about certain stocks that have run up massively, and he said valuations are not making any sense, fundamentals are not making any sense. It's being pushed by fund flows coming in right now. So, Sunny, if I were to ask you where you think this money will go, this money is now chasing ideas. What are those interesting ideas looking like?
Yeah, so definitely in terms of sector, I feel the money will be chasing obviously in the rate sensitive sector. So kind of banks, again within bank, private banks like Axis Bank, or for that matter ICICI Bank, HDFC Bank, or on a public sector side, we have seen growth capital being mobilized by all the public sector enterprises. So whether it is Canara Bank, Bank of Baroda. So I will give first sectoral perspective, and then I will give my one of the topic over here. Again, I feel auto is the one of the sector where we are seeing a healthy recovery. So two-wheeler is the space where we have seen a decent recovery. Commercial vehicle, again, it's a play on infra story. So auto is the one of the sector to be in. Real estate, maybe. And then infra as well as defense, where the government, which is purely driven by the government capex. So cement, again, as an indirect proxy play on infra and real estate story of India. Coming to my topic, I think recently there was some adverse news flow pertaining to the ethanol sector, wherein the government has banned use of sugarcane juice for making ethanol. And to that extent, we have seen correction in the Praj industries by 15 to 20% from the top. I feel the ethanol story is still intact in India. I mean, if I take a slightly longer horizon, government is committed for 20% blending of ethanol with petrol. And right now we are at 12%. So right now the demand of industry is around 400 to 450 crore liter. And once the target of 20% is on the table, maybe the demand will increase to 1,000 crore liter. And to write this story, I would like to bet my money on Praj Industries. The stock has corrected. Quarter 2 results were pretty fantastic. We have seen a robust order book in Praj. I don't think so. I mean, just by shifting a minor part of ethanol making process, that will lead to the derailment of the story. So Praj is one of the stock which I like.
But can I just come, Sunny? Can I just come in for 1 second? It's not about the story being derailed. The broader story definitely is there. It's the uncertainty of when the rule might change. And I think that's what sort of got the markets a bit jittery about these sugar companies. You have suddenly seen inflation jumping up. Our inflation numbers are showing us that food inflation is hurting. And then you have this government policy coming in. So I think that is the bigger concern, that the long term, that is the goal. But there might suddenly be a tweak, because sugar prices is an important perspective from the government's point of view.
But again, Tamanna, we have to keep in mind that Praj is an engineering and cap goods company, right? So if you are diverting ethanol manufacturing process from sugarcane, at the same time, the grain-based ethanol is something which gets affiliated support, right? So companies like BDL, for that matter, Gulshan Poly, there are many other companies which are making a grain-based ethanol. In fact, companies like Triveni Engineering, which is a sugar company, they are also using grains to make ethanol. So they have their distillery, multi-field distillery. So I think as an engineering company for a Praj, I don't think so. The business dynamics has changed significantly. Maybe for a sugar industry, yes, it's a temporary, maybe a speed breaker for their growth story of ethanol. But being an engineering company, I don't think so there is an impact on Praj. And at the same time, Praj is working on many other new technologies like SF, wherein they are going to blend biofuels with aviation turbine fuel. So there's a lot of new technology which will come up. Biodiesel is something which government is going to promote going forward. On the other hand, breweries business, which is doing well. So I think it's a good time to accumulate quality business, engineering company, cap goods company, where there is when the chips are down, or maybe due to adverse news, which is a temporary thing which happens.
No, sorry, just one big point. I was the last time that we had a conversation with Shishir Joshipura as well, and he was talking about how they want to diversify the order book in a meaningful way out of purely the sugarcane juice-based distilleries, and which is actually a newer addition relative to all the other places that they had. So in some sense, what Sunny is saying might actually turn out to be true, and maybe just maybe the fears of the street, especially for a Praj, relative to the sugar companies, might have been overdone. So it kind of gels in with what the management had to say. But Tamanna, sorry, before you move on to the other piece, I want to get in Ruchit's view as well here, because these stocks, all sugar and even Praj, very well traded stocks which have come off the boil completely, just in terms of resistance or support levels, Ruchit. They may be great fundamentally, but maybe the upmove could come in a bit delayed. So for Praj specifically, fundamentally it might be a strong move. Do the charts indicate any kind of buying activity or a rebound or anything, or is it difficult to say? Sorry, I think Ruchit is on mute. Maybe we need to unmute Ruchit. But Ruchit, can you please give me a call, or at least I couldn't hear you?
Yeah, I can hear you now.
Yes, please.
So if I look at last 6 or 7 months, then whenever there have been corrections in Praj Industries, then 500 around levels have acted as a good support for the stock. So I think we could see some bit of 4 to 5% further down move from current levels. But the risk reward ratio would turn favorable to take any contra trades if the stock trades around that 490, 500 mark. So in case if anyone wants to do any kind of bottom fishing, then around 500 could be good levels to take a contra trades over there.
Got it.
I just want to come in on the point about public sector companies as well, and what looks good there. NBCC, for example, hit a lifetime high on orders again from the government and they have to build these warehouses and agri, infra. We had IRCTC doing very well, and a whole host of actually public sector companies. Sunny, have you changed the way you're looking at these companies as a bucket, not in terms of government ownership, but the sectors they belong to? Because a lot of people we've been speaking to have been rejigging their view on the entire pack.
Yeah, I think the entire public sector, especially CapEx-driven companies, we have seen a massive re-rating during the last 8 to 9 months, and that's purely backed by the robust order book, and the order continues to percolate for each and every company. Even every few days we keep on hearing order for some company or other, and there are still a lot of valuation gap which is left as far as the public sector companies are concerned. A case in point, Engineers India, a robust order book, play on oil and gas capex, trading at 20 time price to earning multiple. I think today again the stock has scaled a new high as far as 52-week high is concerned. So again, I feel that oil and gas capex story will continue for next 3 to 5 years, and Engineers India will be indirect beneficiary of that. Moving on to railways, again, railway, we have seen a massive capex from the government across the front, whether it is Vande Bharat, whether it is laying of track, whether it is electrification of the tracks. So entire thing story is playing out, and after a long, if I talk about price action point of view, the stocks are coming out of consolidation. Maybe Ruchit will help us understand on technical front. So railways is again where we see a decent earning visibility. Similarly, on shipping side, so companies like Mazgaon Dock, Cochin, there we are seeing a very strong revenue visibility for 5 to 10 years, because we all know that one ship, each and every ship, big ship, take 5 to 6 years of execution period, and there again execution cycle is pretty long, and that gives a lot of revenue visibility and profit visibility. So definitely, all these stocks used to trade at maybe a single-digit price to earning multiple. One round of re-rating has happened, and now henceforth, when the companies start reporting earning growth, decent earning, we will see appreciation in line with the earning growth.
Okay. Well, but yeah, clearly today PSUs have been the center of attraction. Now, we've spoken about gainers a lot. And gentlemen, thank you. We'll take about 10 more minutes with you because the markets are about to shut in about 15 minutes. So we'll do that. But while we're looking at gainers all through the day, and we should, because the indices are at the high point of the day, what's lost out today? Power grid, and it's been lower for a while throughout the trading day today. So that's the first stock on my radar. And then I was looking at the slightly broader end of the spectrum. 2 or 3 interesting names that have come off. One of them is Century Textiles. The other one is CESC, which has seen some serious delivery-based buying in the recent past, but is down about 2.5, 2.7%. And Westlife, after nudging highs of 1,000, that stock is down to 834. That's been a serious pullback onto a stock which probably had a lot of promises as well. Ruchit, maybe I'll talk about CESC because power-related themes are very strong. This one nudged 125, 126 and has seen a bit of a pullback, but also rallied 50-55% in the recent past. What does one do here as a trade?
So I think that could just be some short-term pullbacks, but overall trend is quite positive because even after the rally, if you look at last 10-15 days volumes, the volumes have been quite positive in spite of the run-up that we have seen in most of the power stocks. So just 1 or 2 days of correction won't change the broader trend, but yes, the momentum readings are a bit overbought. So in case if we get cool off and the stock correct towards that 115, 112 mark, so ideally, one should take this as a buying opportunity. So nothing much to worry about. Just a regular correction could be there, but buy and dip strategy should be kept in CSE.
Okay, so nothing much to worry about on CESE at the very least. But yeah, the likes of Westlife, etc., have also corrected, so that's interesting. The other one, we hear some fundraising expectations in select names in the EMS space. Now, Sunny, I believe you have a call on Sirma SGS. The commentary from the management is very bullish around growth, despite 1 or 2 hiccups in the recent past. But they mentioned that these are one-offs in the quarter, and they believe that FY25, 26, 27, their growth rates are strong. What is your view there?
Yeah, definitely, Niraj. We are also positive on Sirma, and we have recently initiated a coverage on the company also. And basically, the growth story continue to remain intact for the entire EMS sector. The industry is growing at a 40% CAGR, and Sirma being one of the leading PCBA manufacturer, they are going to benefit out of that. And at the same time, all the end user segment for the Sirma, whether it is automotive, whether it is consumer electronic, all these segments are growing at a rapid clip. And in addition to that, the company is yet to do tie-up on PLI 2 scheme. So recently, we have seen tie-up of Lenovo with Dixon. I am expecting a similar tie-up for Sirma also in laptop and book space. So that can be one of the short-term trigger. Again, the margin blip is the temporary. What I feel, maybe the company average margin we will see over the period of next 2 quarters, and then FY25 and FY26 we will see a margin expansion. A pretty robust growth we are expecting in terms of profitability as far as Sirma is concerned. In FY23, the company has reported 119 crore profit, and we are expecting the company to report 435 crore profit in FY26. So almost kind of 3.5 to 4x jump in profitability over the next 3 to 4 years, and trading at 28 times FY26 price to earning multiple.
Yeah. We're just about 15 minutes to close or so. Let me get in Agam, my colleague who tracks the F&O space. Agam, big day today because you had the weekly Nifty expiry. On a day when you had I think, unidirectional move. How has it panned out?
Right. So Tamanna, we were talking about this morning, that should we see the Nifty open and sustain over 21,000, we are most likely to close well above the mark of 21,100, and that's exactly how things have panned out. Because not only have we seen shorts covered around 21,000 mark, but because of that short covering, we've seen that impetus for the Nifty building over, along with a lot of new longs coming through as well. And that, in fact, has been contributing to this 1.2% up move for the benchmarks. As far as the Bank Nifty is concerned, naturally it will move in tandem with the Nifty 50. So not too much to speak for there. The Nifty itself, the Nifty futures, that is the December futures, are looking at a staggering 15.5% increase in open interest as we speak. Of course, this number is expected to moderate as we move into the final 15 minutes of trade, but still a lot of longs into the system. The question really is that move into a period where there could just be a little bit of a lull owing to holidays coming up. That said, in terms of the stocks that are advancing, we do have gains in something like a SAIL as well as perhaps something like a DLF. But it is the IT space which is definitely dominating gains today. In terms of Coforge, we have Emphasis advancing. All the top line names in the IT space are moving up. In fact, we have substantial gains in even lackluster names like Tech Mahindra and Wipro, which are also up and about. So we are certainly seeing a lot of longs building up there as well. And again, we're going to have to wait and watch that whether or not we in fact do have some amount of consolidation left as far as our markets go, or can we in fact see a little bit more of an upside? Maybe in fact, if I can take this up with Ruchit. Ruchit, your view on the markets now, especially now given the fact that we are likely to close today about 21,100.
Yeah, so Agam, you rightly pointed that a lot of IT stocks have witnessed long formations today. If we look at the open interest, firstly, these were some of the pockets which have relatively shown underperformance over last few weeks. And now, when the Nifty IT Index 2 has surpassed its previous swing high, and a lot of stocks have seen long build up in the index in the future segment. So I think this momentum could continue, led by these IT names. So as far as index is concerned, 21,000 would be the initial support in case if we get any kind of minor declines over here. But no, I think ultimately we are headed towards the 21,350, 21,400 range on the higher side.
Yeah, absolutely. Agam, stay on with us as we wind down to close of a fantastic day. One day left to the week, and hopefully those factors will, persist and pay off. Sunny, in a market like this, when there is frankly no blip on the horizon apparent, there is no sort of negative news flow to look at what could toss the apple cart. What happens to sectors like your FMCG and pharma. They're underperformers today relatively, and you can see them in the loser pack as well. Do you think that cyclically is what will fire next, as this sort of fear that rural consumption is not living up to expectations starts sliding?
So yeah, again, right now the money is moving out of defensive and chasing a cyclical or rate sensitive sector. But having said that, the benefit of low crude oil prices or a benign raw material prices will likely to benefit the many FMCG companies. But on one hand, we may see some benefit on raw material prices, but on other hand, there is some concern on demand, especially from rural areas. So urban area continue to do well for all these FMCG companies, but rural area is something where the green shoot is visible, but still not. Companies are not very confident on the growth on that aspect. So to that extent, maybe overall on a net basis, we may see some kind of marginal earning upgrade for FMCG companies. But again, valuation is something which is not comfortable over there. But the companies which are growing at a relatively faster clip, companies like Tata Consumer, there we may see some institutional interest which may come in. Or for that matter, companies like Bajaj Consumer, where there was a lot of pressure on raw material side because of the increase in crude oil prices. And because of correction in crude oil prices, we may see a margin expansion over there. Although the demand for the entire hair oil as a category is not growing at a rapid clip, but just because of the cooling off in raw material prices, we may see some relatively faster earning growth. So again, selective stocks in FMCG can see a catch up once market is at the top. And coming to the pharma, again, pharma, we have seen all the negative news behind us. So price erosion has relatively abated in the US market. So again, pharma, it's an under-owned sector. Maybe we may see there again certain pocket where there can be a rally in the pharma sector.
Anything you like specifically, Sunny?
So in FMCG, again, my topic is Tata Consumer. So that is a company which is growing at a relatively faster clip. The reason being that post merger of food portfolio from Tata Group into the Tata Consumer, so that segment is picking up very well. At the same time, their Starbucks JV that is doing very well. Their beverages portfolio is relatively doing well, and the company is following inorganic growth strategy. So we are seeing a smaller brands like Soulful, for that matter, company acquiring a new brand every 12 to 18 months and then scaling up that business. So that is giving again a kind of fillip to this earning growth. So I think Tata Consumer is the one company which I feel one can add with an investment horizon of at least 12 to 24 months.
No, and in pharma, because you mentioned that pharma is under owned, and the worst news is behind them.
So again, in pharma, I would like to go with a smaller size companies like JB Chemical, or for that matter FDC, where we are seeing a decent growth in terms of the earning for both these companies.
Yeah. Ruchit, can I ask you anything in these two spaces that you like at all in the charts? Because these seem to be the only ones left out of the party.
So I think I would go with more of a pharma names if one is looking from a short-term trading perspective. So a couple of names from the pharma sector. One would be Aurobindo Pharma, where we have seen a good amount of long build-up in the future segment. And also if you look at price-wise moves, then on minor declines which are there, the 20 EMS has been acting as a good support for the stock. So the downside seems to be very limited from here on. Even from a trading perspective, traders can look to create fresh long positions here around 1045 with stop loss below 1000 and expect target somewhere around 1120 to 1140 in the near term. And another pick from the pharma basket itself, it would be which is Granules India. But this will be more from a mid-term perspective. Of late we have witnessed good price volume action here as well. On the Granules India, the previous swing high resistances are around 425 to 430. That's where we expect the stock to head higher in maybe next 3 to 4 weeks. So if one is looking from a positional perspective within the pharma space, Granules also looks a good contra buy over here, keeping a stop loss below 360, expecting targets around 430.
We can't seem to hear you, Niraj.
Sorry, apologies. But I was trying to look at some volume buzzers in the session today as we wrap up trade before we take in closing strategies. TD Power Systems has gained about 5-6%. Volumes are about, well, maybe 11 or 12 times the 2-week averages. Similarly, Castrol, after a while, I'm seeing the stock being up 7% on volumes which are 7-8 times. And out of the blue, Indus Tower is the third one, which is seeing some serious price and volume action there. So watch out for these three names in trade. But Ruchit, 8 minutes to go. You've given us your ideas at the start of the day. Are there any closing strategies that you have, if or else a view on any of these volume buzzers?
So I'll cover both within the volume buzzers. I think Indus Towers, which you just named, it's on the verge of a breakout from a long consolidation phase. Even today, if you look at cash market volumes, then it's much higher than the daily average volumes which we witness. So this stock could head higher towards 215, 218 in the short term. So this looks quite positive. One can even look to create fresh long with stop loss below 190 for those targets. And from a BTST perspective, I think Infosys is one stock which one can take long towards closing now. So ideally, long formations. I've already spoken that many of the IT names have witnessed some long formations. And if you look at recent past, then 1500, 1490, this has been the resistance since the month of September for Infosys. It's on the verge of breakout of that resistance level. So I think this could be one stock which could see a good catch-up move within the large cap IT space. So if one has to take a call from BTST, go long on Infosys at current levels with stop loss below 1470. Expect target somewhere around 1550 to 1560.
Okay. So some closing strategies there from Ruchit. I will, Sunny, my final question to you at least. You've given us some ideas in Praj, Sirma as well, and a clutch of those mid-sized names. Just wondering, and maybe we spoke about a lot of PSU names, but if you were to bet on one PSU in particular as a house, is there the first amongst equals out of the many that you guys might be covering? Is there one stock that you guys really like in the PSU bucket?
So again, Niraj, I would like to bet my money on Engineers India because there I feel the rally is yet to pan out. Again, it's a play on oil and gas capex story. So we have heard a lot of big capex from oil marketing companies, HP, BP, IOC, and we all know Engineers India is a PMC company. So most of the projects will go through Engineers India only. And at the same time, we are time and again we are hearing from management there is an opportunity on hydrogen side also as far as Engineers India is concerned. We have seen a very decent order inflow during the last 6 months, that is 2 quarters. After a long time, robust order. So I don't have order book number right now handy with me. But I think the visibility is pretty strong as far as Engineers India is concerned. Valuations are comfortable, and the stock has a bit underperformed, relative underperformer as compared to the other PSU stock. So that's our topic.
Some interesting themes building up towards the end of close, and you're also seeing real estate having a pretty good day. We haven't talked about it thus far, but Godrej Properties, definitely Prestige, some of those names having a pretty good run. Obviously, any kind of indication of interest rates coming down will be positive, although we must add that the run up in real estate prices and fundamentally even in the number of houses registered, sold, etc., flats sold has been robust despite not a hike but a long duration of pauses by the Reserve Bank of India. In fact, 5 consecutive pauses on the interest rates. So any kind of cut there might be positive for this space as well. Some of the big gainers also during the day and seem to be winners of the day are IRFC. Niraj, if you recall that our experts had talked about IRFC in the opening show today. SAIL has done fabulously. So has Emphasis, Coforge, all of those mid-IT pack companies are doing very well. What has not worked? Z Entertainment, Max Health, Delivery, some of these companies have been consistently underperforming. Metro Brands, one of them. So, when we were talking about that entire theme, that consumption theme, not really kicking off, you can see some of that pain there as well. Sunny, as a BTST kind of a strategy, if any, what would be your take right now? Or would you sort of wait for a bit before deploying fresh capital?
Tamanna, what I feel is that the stock which have not performed among the auto sector is Maruti, and I feel the growth story for Maruti is still intact. I don't know why the stock has underperformed. So that is one stock which come to my mind if you want to deploy your fresh
Is
capital.
it because they don't have a clear EV play or EV vision so far, and everyone's bet is on renewables? You think that could be?
So EV is something which management has went on record to say that FY25 or 26 is the year where they will unveil their EV product. So I don't think so that, and once, and I'm sure it will be value for money product, because whenever Maruti comes, it will be a value for money product, and all these cab aggregator, maybe they will start jumping on that product once the product is unveiled. However, I am not aware about the pricing, what is the price point at which the EV will be launched. But being a Maruti, I am assuming that Wagoner is which is one of their flagship product, may see conversion to the EV as one of the product. But again, robust order book. Although if you November month, if you see the sales number, the growth was only 3%. But if you deep dive, the high margin product SUV portfolio is growing at a rapid clip as compared to the entry level portfolio. And to that extent, I think margin expansion is something which we may see in the Maruti. And at the same time, stock has not performed since the last one month. I think hovering in the band of 10,300, 10,700, 800.
Sure, we get the drift. So, Sunny as well as Ruchit, gentlemen, thank you so much for taking the time out and being with us. Really appreciate your time and giving us all those ideas. All right, that's the view from both our experts. And as we get ready to wrap up trade, maybe I'll just do a quick summation of the large caps, and then Tamanna will a quick summation at the broader end of the spectrum as well. But frankly, I think that the two themes, if you will, kind of mirror each other. To an extent, it's PSUs and IT, which has stood out in terms of gainers in the session today. But let me stick to the Sensex and bring out the key winners. So Infosys at 1509 is the top gainer on the IT pack. TechM ruled the roost for the significantly long time, but Infosys just come back with a bang and is now the top gainer on the Sensex, followed by Tech Mahindra, HCL Tech, Wipro. This is TCS2 is in the list of the top 10 gainers. So quite stunningly, IT's made a reversal, which is very, very strong. We heard Vikas Khemani speak about that yesterday as well on the show about how IT might actually do well, and the great going there. Bajaj Finance is the other one. IndusInd Bank are a couple of others which have done well. There's strength in HDFC Bank at 1650, so that's doing okay. And ITC is up about 1% as well with all the reorganization that they're talking about. Not too many losers. I think that's the key thing. On the Sensex 30, we don't see too many stocks. Maybe a Power Grid has lost out a little in the session today. But aside of that, don't see too many stocks. And yeah, maybe a Nestle. Those are the couple of stocks that have lost above 1%. Otherwise, there are some small losses. But Tamanna, the broader end of the spectrum.
Broader end of the spectrum as well. And just a quick word on the Nifty 50, where the advance decline ratio is just telling you what kind of a mood it is. 36 advances to 14 declines just on the Nifty 50. And it's also telling you that, yes, very, very positive day and mood overall, but it's not as if everyone's getting that fabulous treatment or every stock is getting that fabulous treatment. So yes, Power Grid is weak. HDFC Life has been persistently losing out last couple of trading sessions, so that continues, as is Nestle India, Tata Consumer. Some of the losers today, Dr. Reddy's, Cipla also in that list, which is also telling you about how the pharma pack really is not seeing too much of a boost yet. Maybe it will be the turn for pharma companies to respond next to the kind of broader bull run. On the mid-cap space, IRFC has been a fabulous complete winner. Nykaa has also not done too badly actually today, about 5.5% up. Persistent. Adani stocks have had a good day today. M&M Finance has also done pretty well, about 6.5% up, as has Indus Tower. So these are some of the big winners here. What has not worked on a day like today? MFSL has not worked. That was down about 3.5%. Manyavar, Uno Minda has also not done too well today. Ajanta Pharma. So again, the theme stays similar to what we are seeing in the large caps as well. So very thematic kind of play. Relaxo has seen some profit booking. It had gone up because they acquired more land recently on the outskirts of Mumbai. Blue Dart also down in the red. So very specific kind of stock play, Neeraj. It's looking like that kind of a market where you have to be more and more careful what you pick, isn't it?
Yeah, but guess what? Banks, I mean, HDFC Bank is still at 1650, hasn't had a meaningful rally. So who knows? Banks might be the final draft before we, pull back. But for now, the going is good, so we're not complaining. But well, uh, it was lovely bringing India market close to you today on a day like this when we ended very well at record highs yet again, and the Nifty futures were pointing towards some more upsides likely tomorrow. So let's wait and watch if IT participates or is it banks. But Tamanna, we call it a wrap on the show.
Absolutely. Thank you so much to all of you for joining us right here on NDTV Profit. And we'll see you back tomorrow with Markets Open with the feeling of TGIF.